Hello everyone, Joshua Hayes at BigWaveTrading.com. Another weekend overall market review, and then the lessons we're going to learn about is whenever I go long a stock on an end-of-day swing trading basis, what should it do versus what it shouldn't do? Lately, due to the bifurcation in the overall market, we have had some, not a lot, of signals on the long side, and we've had way more failing than working out. The good news is rule number one through rule number 100 at bigwavetrading.com is always cut your losses, no exceptions, always risk maximum what you're willing to lose where you feel comfortable. If the max you lose per trade before you start to freak out is $50, that is the max you lose per trade, no matter what, from your entry price to an intelligent, logical, and rational stop price. You take that level that you're entering versus where your stop should be. You subtract that level that you enter. For me, it's my good to cancel buy stop order versus sell stop order. You get that total. Once you have that total, you figure how much you're okay risking. You divide it into that total. That is your share size on the position. Now, obviously, you do not have to trade like this, but if you want to keep your losses consistent and universal across the board, and you want to see major progress in your accounts and your account balance grow over time, you need to keep your losses contained, and I always recommend a max level. So with that being said, we've had a lot of cut losses. 1R is the max loss. 1% of my entire account capital is the most I'm ever willing to risk right now per new trade, unless it's perfect. We have not had a perfect setup since EVC, and I'll review that trade here in a bit. But first, before we go over that, let's look at the overall market. So the lesson's going to be on cutting losses, but not really on cutting losses. We already know we do it all the time. You're going to have losers. You always keep them small, and you move on. But what I want to show you is what the winners should look like when they work. Now, how do we tell the difference between what's definitely going to work and what's not right now? That's going to be tough because the overall market continues to be tough despite a very resilient uptrend. And that's what I want to talk about. The SPY, amazing. We got up to that third ATR, pulled back. We couldn't even mean revert to the 21 EMA before rallying back to new highs. That's a melt-up market. It's strong. But the one thing I want to warn everybody about, this is the last week, technically, before earnings season really starts up. So this is the last week, starting on July 17th through September 27th. That is the most bearish rolling period seasonally for the stock market since 1950 on an annualized basis. So we're about to hit that seasonally very weak period, and this lasts all the way to the third week of October. So technically, we only have one bullish seasonal week left. Now, that being said, sentiment is not right for a major market top. Remember what we did last year, September through November? I could see this happening again this year. Will it turn into a crash below the 200 simple moving average? I do not know. I do not expect that. There is not enough sentiment indicators that are too bullish. In fact, go look at what the CNN Fear and Greed Index is right now, despite the SPY, QQQ, the SPY, DIA, and we'll call it the QQQ because it's a closing basis at new all-time highs. So pretty impressive overall. Nasdaq also at all-time closing highs. Now, the one thing I will say out there, before we head into the seasonally bearish period, we could continue to melt up. We could also consolidate and chop around. I'm in a consolidate and chop around camp. The mere fact that the market continues to be bifurcated is bad. I'm glad to see the market in the last 2 days respond pretty well, but overall the IWM remains weak. That is my sweet spot for the end-of-day swing trades. We can see the TTM trend momentum is lower. There's no squeeze, gray, red, or yellow dots in the QQQ or SPY or the DIA, and the TTM trend momentum is moving higher. So you would just be chasing here. And then besides that, if we look at the SPY, there continues to be negative divergences everywhere on all indicators. If you just look at where the recent highs, like in TSV, is to where it is now, that's negative divergence to price. This is technically everywhere. RSI, negative divergence to price. We have PPO histogram, negative divergence to price. It's not bearish, but at the same time, it's not bullish. We should expect some chop. You know what? That's enough. That's enough for that. So the market overall, I'd say it's going to be choppy. And the most important thing I look at, the advanced decline lines still look good across the board. Everything looks fine. Only the mid caps and small caps look weak, and that's no surprise with the IWM. But the one metric that I really love tracking is the advanced decline volume ratios. The advancer's volume versus the decliner's volume. So let's go ahead and see what that looks like right now on all the indices. Look at stockcharts.com, exclamation point, CUM, VOL, and then Dow. If you just look up CUM, VOL, exclamation point, you'll get all the charts. Now there's 9 of them, and I have them all in this page, and we're going to look at them all, and they're kind of all out of whack, so whatever. But this one is the Dow Jones Industrial Average. Now we know for a fact the DIA is hitting new highs, right? Is the advanced decline volume line doing the same? No. More negative divergence. This is why I'm not extremely bullish here, and why after this week, and I've been cautious, you know, in my new long position on the end of day side, you know, I've been telling the story. It's all been about day trading, that intraday time frame, hitting stocks like NEGG, hitting stocks like MOXC, focusing on stocks like SGOC when they start lighting up my scanners. So really the end of day swing side hasn't been the main side. When big caps are in favor, I favor my quarterly portfolios. But because I couldn't tell if value or growth was going to lead, I mixed them all up. And by doing that, they're only slightly outperforming the market. But as long as you see something like this in the DIA, you have to be cautious that a market pullback might occur. Based on the way that my new long positions are acting, I could definitely see a pullback coming. This is the mid cap. No surprise here. It looks similar to the IWM. That being said, we have a clear series of 3 lower highs, and we broke to new lows here from this consolidation pattern back in June. So I'm keeping my eye on that. That also shows me a little bit of weakness. Now we jump. Sorry, guys. These are all out of whack. I got to figure out how to order them up better. This one's the Nasdaq advanced decline line. Everything looks good here. This is good. This is strong. This is what they all should look like, but they don't. This is very good. This is the Nasdaq 100 advanced decline line. Looks good. No problem here. What did I say in the last video lesson? Your focus is on the Nasdaq 100 big cap stocks. NYSE. See this? It's a negative divergence. But we have the SPY hitting new highs. We didn't really see that until this year, or until this month, until June. We didn't see that at all this year until June. And I keep that in the back of my mind. Common stocks only. Same thing. We never really saw that. The regression, if we drew a regression channel from here to here, it's not the same from here to here, is it? Things are slightly changing. And lower lows, by the way. Well, it's about even. But we didn't really have that before. Nasdaq 100. Excuse me, the OEX. That's the S&P 100, I do believe. My brain is having a little mini meltdown there. Negative divergence. Moving on. S&P small cap. Still strong, but slight little negative divergence. But not really, because the IWM's not going anywhere, so that's like splitting hairs. S&P 500, though, we know for a fact it's hitting new highs. How about the advanced decline volume ratio? Not so much. So not only do I like to see the advanced decline lines confirming new highs in the market, which they were until just recently, I also like to see the advanced decline volume line confirm along with it. That's not happening. More negative divergence. Showed you the PPO, the RSI, the TSV. You could also look at the MACD, stochastics, and any other indicator that you like. And negative divergences abound while the market moves up. I said in the last video lesson, and I'll say it this one again, I do not fight price. I go with it. I'm still going long stocks. You're not going to see me start shorting stocks until we're below that 200 weekly SMA on the SPY. We retest it and fail. Then I'm going to start hitting the short side. The last short I took was in 2012, Broad Vision.
And God, if I can even remember the guy's name, was that a Jonathan Lebed pump? But whatever it was, I had a lot of shares to borrow at Interactive Brokers, so I was able to short that pump and dump. Besides 2012 Broad Vision, I have not shorted one single stock. So I will continue to go long stocks in a melt up, especially if they give me great or near great signals. But I'm not getting any great near great signals. I'm still getting solid signals. I'm still taking them, but more are failing than working out. And remember, as soon as I get in a trade, if it doesn't work immediately, I start raising stops. I start cutting losses. I get out. But whenever they work, we ride the trend higher. And on that note, I have enough working to make me still take new signals when they come. Let's take a look at those. Once again, I want to remind everybody, this is not a perfect chart. There's red in this chart. There's tall volume bars, but it's really good because there's a lot of green bop. Since it got green balance of power, there's been no red bop. Only one tall red volume bar, pocket pivot point signals here, the blue lines, and a surge in bop to max green with volume slightly truncating the previous volume bars. Is it a perfect signal? No. Is it a good signal? Yes. If we look at the 5, 10, and 20-day simple moving average, they're not properly, or they are, no, excuse me. They're not properly stacked. 5, 10, sorry. I got a little colorblind. My eyes are going bad on me. Seriously, way to get older. When you get older, I had perfect vision. Now I don't. What are you going to do? But they're all trending up. 10 up, 5 up, 20 up. Now, if the 5 was above the 10, above the 20, now we got a perfect stack. No, it's not surprising that EVC has been a perfect new long position. This is how you want them to work. Now, I have no new public long positions to give because I only have one quality long position, and that is going to be reserved for members of Big Wave Trading on at least the gold standard. So, let's review the stock that failed in US, just to review how we cut losses. In US, I gave out as a new long signal here, made it very clear, it is not perfect. There is volume truncation, there is max green bop, there is a pocket pivot point signal. There is too much red in this chart, and this price action is not tight, obviously. Still, willing to give it a shot, risking 1R from this level to this level. But remember, I told you, if I get long something and it doesn't move higher immediately, I start cutting losses. Well, the next day I was triggered in immediately, 1/3 of my stop here, 1/3 of my stop here, final third right there. That prevents me from losing that max 1R loss. NUS proceeded to fail over the next 2 days. Guess who didn't take a full 1R loss? Bing, 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 bing. So no harm, no foul. As you can see, NUS has not worked out. Now, unfortunately, this has been the case with a lot of new long positions. However, I want to show you what it looks like when they work out. This is what they're supposed to do. So really quick, we're going to look at this one, RMCF. This was RMCF's long signal for me. RMCF was in my perfect speculator scan. It's one of my top 2 quality scans. I got a hammer candle off an uptrending 50. I have volume heavier than the session before and a slight uptick in BOP. Was this a great signal? No. Do you know that this signal is going to work while all the others are going to fail? Absolutely not. I never would have thought that this one would have worked as well as it did because 5 days is moving down, 10 is moving down, 20 is moving down. We don't have a proper stack. No surprise, the next day, RMCF fail, right? Had a full 1R loss, right? Wrong. I get long with a move above 619, triggering my stop at 620, limit at 626. That did not happen the next day. The high day is 614. So I don't have a position in RMCF yet. Now, the next day goes even lower, next 2 days. But then reverses higher. Do you see that white triangle? That means my order from this day was filled. Now, why did I keep my order on? Because it pulled back on lighter volume, still had green bop. That's why I kept it on. I got long RMCF, and look at how it has performed since getting long. This is what they are supposed to do. They obviously do not always do that, but RMCF, in under a month, 33% gain. You cut your losses at 2%, 3%, 1%, 5%, 2%, 3%, 4%. Before you get this final big winner in a short amount of time, this one winner just took care of 4 or 5 little losers. I know people don't like those odds. I don't like those odds. But in a choppy bifurcated market, using this methodology, that's going to happen. But if you want to see how something should perform after I get long, this is it. Now the next one I want to look at is VLRS. Signal in VLRS. Look at what the volume does in the middle pane. Look at what BOP does. BOP max green, volume surge. Is there a pocket pivot point signal this day? No. Is volume truncating all the previous volume bars? No. Is it perfect? No. Is it off the 50-day simple moving average? No. At least it's a little extended from the 20, but at least the 5, 10, and 20 SMAs are trending higher. But is it a proper EMA stack? No. So it's a little extended, not perfect, can't load up. Do I know VLRS is going to do what VLRS does here in a minute? No. How would I know that this one was going to work and some of the others, like NUS, was going to fail? This one had red in it, ugly volume. Chart's a little wild, not as wild as NUS. How do I know that NUS is going to fail and VLRS is going to do this? I don't. But it did. And I got a pretty good position in it, risking down to here. My stops didn't trigger. I kept some tight stops here. But as you can see, trended higher. Hit just one of my profit stops. Since then, moving higher. And as each extension above the 3 ATR happens, I take some profits. Sell some at the market here. Sell some at the market here. What do you think I'm going to be doing Monday morning? Taking some more profits at the market. VLRS, 26% gain in a little under a month. Not too shabby. That's what I'm looking for. Now, a couple of others that worked recently, but the ETF side, IYC. But I want to show you what this one looked like. Bam. Look at the BOP surge. Look at the volume truncation. Look at the pocket pivot point signal. Yes. Is it a slow mover? Yes. But could you take a huge position size in this? Absolutely. And yeah, you're not getting huge gains. It's going to stop you out of a little bit here, but you're still long the majority of your position. 3%. Not bad in a short amount of time whenever we saw the market do its pullback. Like I said, it isn't perfect. The last one I want to show you is Pool, because Pool has been a long-term winner, but I recently added to it, and it's been doing the same thing. From its first long position, look at how perfect Pool has been. This was the signal. This was the entry. That's why you see the white triangle. Look at this. Grind higher, holding above the 50. Since that first signal, Pool is up 39%. Not a huge gain, but not bad in a little over 3 months of work. This was my second signal. Pocket pivot point signal. Boom. Volume was heavier than the day before. BOP slightly higher. Pocket pivot point signal. How do I know that this is going to work out the way it does? I don't. But it did. And so this is the thing. This is how they're supposed to act whenever I get long. If they don't act like this immediately, get out. Find the next one. And if there is no next one, sit on your hands and wait. Be patient. Because eventually, you get the VLRS. Eventually, you get the Pool. Eventually, you get the RMCF. Eventually, you get the IYC. And then eventually, we get that EVC signal. We can really shove some capital in. Did I this time around? No. I only increased my risk to 2R. But since I was risking to here, with just a 2R risk, I was able to get good size. Now, if my stop would have been all the way down here with 2R risk for my entry, I don't get good size. But even with 2R risk, I was able to get good size. And that's a 62% gain in a little over a month. And that's what we're looking for. All right, guys, I hope you learned something. Remember, rule number 1 through rule number 100 at bigwavetrading.com is always cut your losses immediately. Preserve that capital. Keep that capital heavy for the next great signal. All right, everybody, if you learned something, let me know. Like the video lesson. If you didn't learn anything, give me a thumbs down. Questions, comments, suggestions, please post a comment. Help me out in growing this channel, and we'll keep doing this. But I like the schedule I'm on right now. We're going to continue to try to do these once a week. If we can get the numbers up, I'll throw in a Wednesday update. But so far, there's been no growth whatsoever. But I love you guys that are watching, commenting, liking, subscribing, sharing, especially if you guys could share my videos. I love you. Like I said, about ready to start doing some prizes for you guys, but need to really think that out. All right, everyone. Good luck during the upcoming trading week. One more reminder, this is the last seasonally bullish week of July before a very bearish period in the market begins that's going to last into the third week of October.